They told you credit cards were the enemy, so you switched to Affirm and Afterpay. Congratulations, you just walked into a trap that doesn't even help your credit score, but can legally ruin it. I am Marcus, this is Macro Finance, and today we are going to open the fine print on Buy Now, Pay Later, the $127 billion industry that sold itself as the antidote to credit card debt and turned out to be something far more dangerous. Here is the pitch. Split your purchase into 4 payments over 6 weeks, 0 interest, no credit check. Shop now. It sounds like a deal, and that is exactly the problem. 59% of Gen Z uses Buy Now, Pay Later. 47% of all users paid late on a loan in the past year. That number was 41% the year before, 34% the year before that. It is climbing every year. Meet Maya, 24, graphic designer, Austin, Texas. She got her credit card application rejected in 2022. Then she found Afterpay at checkout. It was very dangly and sparkly, she said, like I don't have to pay this full amount right now. At first, it felt like a solution. Part 1. The Credit Score Lie. Here is what most Buy Now, Pay Later users believe. If I make my payments on time, my credit score goes up. 62% of users believe this. Almost all of them are wrong. Let me show you how credit cards actually work first. You use your card, you pay on time. The bank reports that payment to Equifax, Experian, and TransUnion. Your score goes up, month after month, year after year. You are building something. Now, Buy Now, Pay Later. You tap Afterpay, you pay every installment on time. Perfect record. Afterpay reports nothing to nobody. Your score stays exactly the same. But here's the trap. If you miss a payment, if your loan goes to collections, that gets reported, and it stays on your credit report for 7 years. 0 upside on your credit, full downside. That is not a financial product. That is a trap. Klarna now reports to TransUnion, but only for longer-term loans, not for their Pay in 4. Affirm reports everything to Experian and TransUnion since 2025. Good behavior can help with Affirm. But a 2025 FICO study found Buy Now, Pay Later data affected scores by about 10 points for over 85% of users. And a missed Affirm payment? That'll cost you far more than 10 points. Buy Now, Pay Later gives you 0 credit benefit when you pay on time, full damage when you don't. That is the asymmetric trap nobody reads at checkout. Part 2. The Loan Stacking Trap. Here's the other trap. It's called loan stacking. 29% of Gen Z users have 3 or more active loans at the same time. 63% of all users hold multiple simultaneous loans. And here's what that actually looks like. Maya, Loan 1, Afterpay, $120 sneakers, 4 payments of $30. Loan 2, Klarna, $180 jacket, 4 payments of $45. Loan 3, Affirm, $350 laptop repair, monthly payments of $58.33. Loan 4, Afterpay again, $95 birthday dinner, 4 payments of $23.75. Total balance, $745, 4 separate due dates, 4 separate apps, none of them talking to each other. In week 3 alone, Klarna, $45 due. Afterpay Loan 4, $23.75 due. Affirm, $58.33 due. That's $127 in 1 week, on top of rent, on top of groceries, on top of utilities. And 31% of users say they have lost track of what they even owe. You don't have 1 loan, you have 4 invisible ones, each with its own due date, all arriving in the same wallet at the same time. Part 3. The Hidden Costs. Now, the fees. Afterpay, $8 per missed payment, or 25% of the transaction, whichever is less. Account frozen immediately on first missed payment. Klarna Pay in 4, $7 per missed payment. Klarna monthly financing up to 29.99% APR. Yes, 29.99%.
That's higher than most credit cards. Affirm, no late fee, but they will report you to the credit bureaus, and they will send you to collections. No late fee does not mean no consequences. And then there's the chargeback problem. If you buy something on a credit card and the merchant doesn't deliver, you can dispute it. Federal law protects you. Buy now, pay later? No chargeback protection. You still owe the installments even if the purchase went wrong. And one more thing. 38% of Gen Z users are buying groceries on Buy Now, Pay Later. Not gadgets, not clothes, groceries. That's not a shopping preference, that's a budget crisis. If you're buying groceries with Klarna, that's not a budgeting tool. That's a sign the budget is already broken.
Part 4. Maya's story. Maya downloaded Afterpay on a Tuesday afternoon. She needed new sneakers. She was in between paychecks. $120 felt impossible. 4 payments of $30 felt easy. Then the jacket. The Klarna banner said pay in 4. She clicked. Then the laptop broke. Affirm was right there at checkout, monthly payments. Then a birthday dinner she couldn't skip. Afterpay again. She had $745 in Buy Now, Pay Later loans, spread across 4 apps. None of them showed her the total picture. Week 3. $127 due in 7 days. Paycheck lands Thursday. Afterpay due Tuesday. She misses it. $8 late fee. Account frozen. She misses Affirm 2 days later. Different due date, same week. Affirm reports to Experian. Credit score drops 47 points in 1 month. 60 days later, Afterpay sends the debt to a collection agency, collection account, on her credit report for 7 years. She went to apply for an apartment. The landlord ran her credit. Denied. I had $745 in Buy Now, Pay Later loans, she said. I thought I was being smart by avoiding credit cards. Maya didn't buy a car. She didn't go on vacation. She bought sneakers, a jacket, and groceries on 4 different apps, and she can't get an apartment. Part 5. 3 rules before you tap. You are not Maya, unless you are already Maya. And if you are, there is a way out. But first, 3 rules. If you follow these, Buy Now, Pay Later becomes a tool instead of a trap. Rule 1. Never use Buy Now, Pay Later for anything you couldn't buy with cash right now. If you cannot afford $120 today, you cannot afford 4 payments of $30 either. The payments are the same money, just spread out. Spread out into a period when you might miss them. Rule 2. Never have more than 1 loan active at a time. 1 loan, 1 due date, 1 payment to track. The moment you have 2, you have started building a payment avalanche. Rule 3. Consider a credit card with a 0% intro APR instead. Most major cards offer 6 to 18 months of 0 interest on purchases. You get 0% interest, same as Buy Now, Pay Later, plus positive credit bureau reporting, plus federal chargeback protection, plus rewards. Buy Now, Pay Later gives you none of those things. And if you are already in trouble, 84% of people who called their provider and asked for a fee waiver got it. Call, ask, before the debt goes to collections. The credit card you were told was the enemy comes with federal consumer protections, credit building, and cash back. The interest-free app at checkout comes with none of that. The real enemy is not credit cards. It is not Buy Now, Pay Later. It is invisible debt. Buy Now, Pay Later made the debt invisible. 4 small payments, 4 different apps, none of it feels like debt until it's all due at once. Maya thought she was being smart. She was being marketed to. Hit like if you've had more than 1 loan at the same time. Subscribe because this system keeps adding traps. And comment, are you on Buy Now, Pay Later right now? How many active loans? I am Marcus. This is Macro Finance, and we'll see you in the next trap.